Good evening, everyone. Thank you so much for joining in today. We welcome all of you to the Flame University's Founder Talk, Series 1 by Dr. Bharat Damani. We're going to be discussing on 0 to 1, how to convert your startup idea to a product. To introduce the speaker of today, I would like Darshan to give a small, I'll leave the floor open to Darshan to give a small introduction to the speaker and the topic today. And just before I let go, the Q&A box is open for you guys to put up your questions as and when accordingly, as Dr. Bharat will be speaking about in the presentation. The chat and the raise hand options will be disabled, so kindly adjust accordingly. Yeah. Darshan, the floor is all yours.
Thank you, Akya. Good evening, everyone. First of all, I hope all of you are safe. COVID-19 has not been easy for most of us, right? And what's important, I guess, is to make sure we see 2021, right? Health is wealth. And so I hope you and your loved ones, your team members are healthy and safe. At the same time, I think the lockdown has helped bring a lot of maturity in a lot of people. I know for sure for me, this has been a lot of good time spending with myself, with my family, not as much with my friends. But nonetheless, what we are trying to do today is bring back Founders Talk webinar series. We conducted a series of about 15 or 16 sessions back in June through August, where we invited founders, investors, business leaders, educators from all around the world, right? And the idea is simple. At the Flame Center for Entrepreneurship and Innovation, we want to nurture entrepreneurship of all kinds. And how do we do that? We run various initiatives for those who have an idea, who are our students, who are our alumni. We run what is known as a Flame Incubator program. And through this, not only we provide knowledge series, but we also provide mentorship and guidance. On the other hand, suppose you've launched your business, you're making between 5 lakh to a crore in revenue, and you want to grow your business, or you want to build your team, you want to raise funding. So in that case, we have what is known as the Flame Origins program. Applications for all of these are open, so feel free to reach out to me, Madhuri, or Nikita. And lastly, we also have a dedicated 1-year postgraduate program in entrepreneurship and innovation, where people who are looking to not just gain the knowledge, but also the experience and immersions in startup ecosystems like Bangalore, Delhi, Hubli, Babson, Boston, are some of the examples where a dedicated 1-year program helps you answer whether this idea makes sense, whether you want to build this idea, build this business, whether you're the right person to build this business, amongst many other things, right? So we already have some awesome students building some really good businesses. And we are looking forward to the next round of applications coming through for the next academic year. Now, focusing on today's session, we are bringing back Founders Talk series because we got consistently a lot of people, tuning into this webinar and finding it useful. And it's thanks to people such as Dr. Bharat Damani, who take an hour and a half of their time on the evening to join us and share what they've learned, what they've experienced, and what they've researched. So today, the topic is on how do you take your startup idea and convert it into a product. Ideas are a dime a dozen. If you probably Google business ideas, you'll get pages and pages of ideas. But the difference really lies is, what do you care about? What is it? Why is that idea important to you? And what can you do about it? And that therefore, what differentiates entrepreneurs or people with entrepreneurial mindset is their ability to act on that idea, and make something meaningful, impactful on it. And so today's session, I want to invite Dr. Bharat Damani. He's a colleague. I've learned a lot from him. I continue to learn a lot from him. He is a product of 2 IITs. Getting into one IIT is difficult enough. He's gone through IIT Kharagpur and IIT Bombay. He's been a consultant. He's run his own business in manufacturing space, in the consulting space, in financial space. I know him as an expert who's probably the best person on financial projections and how do you figure the financials when you are in the early days when a lot of assumptions are built in. So I've learned a lot from him about that, but of course he's a multi-dimensional person with the ability to also share his experience and expertise on converting an idea to a product. I'm not going to say a lot more. We have only about an hour. The only thing I'll suggest is please put in your questions. Dr. Bharat loves to make it interactive. He's obviously got a presentation, but would love to make this as interactive as possible by putting in your Q&A. So Dr. Bharat, thank you for joining us. It's an absolute honor to have you here again, and looking forward to a fun session this evening.
Thank you very much, Darshan. It's always a pleasure to associate with you, work with you. And today, of course, the time is very, very short. So let me quickly jump into the presentation. And there's a lot of content that I'm going to share with you. So, of course, I can't do a lot of detailing. There are so many things that an entrepreneur needs to look at before you start the journey, and particularly during the initial stages, because the infant mortality rate in the entrepreneurial world or the startup world is extremely high. We all know that. Now, it's extremely high not because the reality is difficult. I would say it's extremely high because the entrepreneurs who jump into it do not take enough measures to understand what they want to do and to do it in a systematic manner. If you do these two little things, the entire journey can be really, really wonderful and enjoyable. So let's quickly look at some aspects of the initial stages, especially when you have an exciting idea, what do you do with that idea and how do you take it to reality. So idea to product. Okay, so that is the entire theme. Now, what do we actually mean by this? What we mean by this is, first of all, do you have a customer need? If you are not having a customer need, what are you trying to create? There are technical entrepreneurs who create an invention and then they struggle to find a market. So obviously that's not a product. So when you're talking about idea to product, we are now looking at it from the entrepreneur's point of view, from the market point of view. So first and foremost is what is the customer's need? Customer need coupled with the product or service that you design, the one that you create, the one that you innovate. Coming out with an idea again is not enough. A lot of people talk about many things. How many of them are able to actually convert their talk into action, into execution, into implementation? You do it, does the customer accept it? Are you able to get customers, and that to paying customers, not the ones who want it for free? You are able to succeed in a small level. Can you scale it up to a reasonable level? And as you scale it up, are you going to be profitable? So when you're talking about idea to product or when you're talking about your venture, this whole thing comes as an integrated package. You cannot do bits and pieces of it. So this interaction today is going to talk about some of the aspects which will help you in this journey. So let us start from the basics. How do people normally get ideas? A lot of people get ideas from their own experiences, their own passion, their inspiration, the things that they've done in the past. And many times, a little bit of the external world in terms of necessity, the problems they have faced or people around them are facing, and so on. And a few of them do some secondary research or interact with through their network and find out various ideas. But the funny part is that many people they look at this idea and straight away jump into execution. It makes a lot of sense to take a pause, look at your idea, and put it through a systematic grind. Now, what does that grind include? So quickly, let me cover a few tools and techniques that are available. Let us see what they are. So first of all, you have specialized techniques for ideation. There's something known as the scamper technique. There's something known as the ideate method. Now both are acronyms. So details of the scamper and ideate are given here right away. And believe me, both these techniques are so simple. If you do it systematically, you'll come out with an amazing, creative, and innovative solution or a product. We also have the design thinking technique. Of late, design thinking technique has become very, very popular. A lot of workshops are happening on that, and a lot of entrepreneurs are using the design thinking technique in their thought process. And once you do that, people say that we've done it. Now, that is just the beginning. What happens is after you have come up with this idea, it's very important for you to understand what is the product that you are about to create and about to deliver to the market. So we have something known as a value proposition design. In the value proposition design, you first focus on what your product is, uh, describe the product in as much detail as you can, its features, its benefits. And according to you as an entrepreneur, when you're going to introduce this product into the market, what are the uh, benefits or the gains that you're likely to create for your customers? And what are the pains that you intend to relieve if the customer was to use your product? So this simple analysis, if you do it systematically, just by looking at the entire exercise from your point of view as an entrepreneur, from your point of view of having developed a unique product or service. So just look at it only from that angle. Having done that, you keep it aside for the time being, and then you switch over and you focus on your potential customer segment. Now, according to you, which is the customer segment that you intend to provide this product or solution to? Visualize that segment, profile that segment, and based on the profile that you are able to create or visualize, you try to understand the life of that customer. So, what are the daily jobs that a daily or weekly job that the customer is going through in its normal course? And in that situation, what would the customer like to have as kind of gains or benefits? And what are the difficulties or the problems or the pains that the customer is experiencing on a daily basis or a weekly basis? So if you're able to understand this is the second part of the exercise. Both these should be done separately. As you do it separately, now you bring them together. So after you've done this exercise independent of each other, bring them together, and then let us see what you thought of in the first stage and what you thought of in the second stage. Is there a value fit? So what you have thought and what the customer wants, does it match? If it matches, then you are creating something of value for the customer. If it does not match, it could be a case of misplaced positioning. And there are enough examples. I don't want to go into examples because the minute I go into examples, we'll run out of time. There are plenty of examples around where the entrepreneur or the enterprise thought of something, the customer looked at it completely differently. And just to give you a very classic example, I would say Tata Nano fits into this. Okay, now specifics. You need to be very clear who your target customer is. It's easy to say my target customer is so and so, so and so, so and so, age group so and so, everybody is my customer. No, you need to profile the customer. What is the customer persona? When you do that exercise, you get a lot of insights as to what the customer is actually going through. And are you able to really understand, empathize with that customer? Are you able to understand the pains that the customer is experiencing? And these pains, is your product able to address? You give me a solution. A lot of people tell me, oh, I've got this wonderful app, and you use this app and your life will be great. I say, hold on. A person like me is not comfortable in using multiple apps every day. So give me something which is much more simpler, much more convenient. I don't want to sit around downloading 200 apps on my mobile phone. So don't come out with one more app. Give me something which integrates things. Give me something which makes life easier and more seamless. So how painful is the problem? You want to make money? You want to have quick customers? What are you offering to them? Is it a must-have product or is it a nice-to-have product? A must-have product solves a problem. A nice-to-have product gives some benefit to the customer, which is more of a talking point, which is more of a, let's say, something to brag about, something to talk about, something by which I get more value in my network. So both have markets, both have demands, but the characteristics of those customers and its impact on you as an entrepreneur, on your cost structure, on your efforts, on your marketing, on your approach and customer relationships changes significantly. So for example, you want a medicine. What will you do? You will go out and find that chemist who is able to give you that medicine. But if you have a nice to have product, let's say I give you a nice earphone like this, and it's not really a pandemic, it's just a feel okay, you wear this and you can use it while you're jogging and all that. I'll say hold on, if you come out to me, if you reach out to me, if you describe it to me, I will possibly go and buy it. So you need to do a lot of marketing in a nice to have product, whereas in a must have product, all you need to do is make the customer aware that this product is available at such and such a place. Customer will come looking for you. Now, this is one point which a lot of entrepreneurs have failed to understand. Your product obviously is your bread and butter, is your business, and for you, it generates income. But like we said earlier, customer decides a lot of things. For the customer, your product or solution, is it a revenue item or is it a capital item? Which means for the customer, does the money that they spend to get your product or service or acquire or use your product or service, does it go as an expense in my profit and loss account or does it go as a fixed asset in my balance sheet? If it goes as an expense in my profit and loss account, which means it's a revenue item, the decision making to purchase or acquire or use that product is generally delegated down the line, and it's easier for the customer to place an order on you. Whereas if it's a capital item, we all know purchasing fixed asset, there's a huge approval process, there's an evaluation process, and end of it, the approval in many cases comes all the way from the board of directors, and in many cases it even goes to the shareholders. Now, if that is the case, the board of directors generally meets once in 3 months. So that is how the two types of products are treated. But for you, it's your bread and butter, it's your income, it's your revenue. So you have to understand that if your product is a capital item for your customer, the process time from your first contact with your potential customer to the point that the customer actually places the order on you can be very long, in some cases, even more than 3 months to 6 months. Now, do you have the capacity to wait for such a long period, or do you have enough funding, deep pockets to sustain long decision making cycles? Now, people have experienced this difficulty in various ways, and people have come out with solutions. A classic solution to this is the birth of the leasing industry. Now, today, a lot of people buy assets on lease, but I do remember when the leasing industry first came out, it was a completely different story. So why did the leasing industry come out? It came out because people were hesitant to buy the product, but they were okay with saying that, okay, give it to me on lease and I will take it right away. So there are financial solutions available to this, but have you thought it through? Nowadays, it makes a lot of sense if you have a story to tell. A lot of customers are ready to buy your product for the story. For example, there are these entrepreneurs who come from farming background, organic food, or they've been through a lot of development cycle. or they have had a unique experience to share with you. So people, the customers connect with the story, and that's how you create a brand loyalty. So if you have a story with your product, with your business, with your solution, it helps you acquire customers in a different way. Are you a fly-by-night operator, or are you a long-time entrepreneur? How do you build trust and connect with your customers? Customers are very sensitive. Are you giving them proper service? Are you listening to their problems? Are you addressing their concerns? Are you making them comfortable? These are small issues, but these are issues which will really decide whether you are able to sustain and grow, or whether you'll face difficulties in retaining your customers. Never ignore the customer. Never ignore even the slightest feedback or comment a customer is giving you. Think about it, review it, look at it, and see what you can do about it. Whatever you are introducing in the market, is it for the local area, or does it have a potential to scale? If you're talking about a local area, you are possibly talking about what we call as a mom and pop shop. Mom and pop shop is something where I do the business only to meet my own lifestyle expenses. So I'm not really interested in taking my business to a bigger level, to scaling it up, or doing something for the larger customer base. In which case, our approach is completely different. What we are discussing today is where entrepreneurs would really like to scale and grow. So we are not really focusing on the mom and pop category kind of businesses. We are looking at businesses where you really want to make an impact in the market, where you really want to succeed, grow, and even go internationally. Now, this is something that many people don't understand. Pandemic. Many people set up ventures to manufacture face masks. Yes, the opportunity is there. There's a big scare. Everybody wants a face mask. How long will it last? Will people continue to use the face mask after the vaccine is out? Will people continue to use the face mask after people have maybe forgotten about the pandemic? What happened to SARS? What happened to AIDS? What happened to bird flu? So anything which is transitory, from an entrepreneurial perspective, your approach has to be different. If you are looking at a transitory opportunity, be ready, recognize that this is a short-term opportunity. You have to make the money while the sun shines, and get out of it, or modify your manufacturing process, or switch over to something else. So you should have the investment in such a way that once this temporary demand is over, your facility is able to manufacture some other product. A lot of people, they want to do things because that is the in thing to be done. But many people don't understand basic things like um, manufacturing a product, or software development. They come from the software industry, but they don't know much about the software development process. Now, being in the software industry and understanding the software development process are completely different things. Likewise, having worked in a manufacturing company and doing product development, physical manufacturing product development are different things. So there is something known as a product development process, or a software development process, or a solution development process. Now, to do that, you need a domain experience and expertise. And invariably, my experience over the last 30 years or so shows that there's a huge element of time and cost overrun in any product development process. When I say product, it includes service or software as well. And I can give you enough examples where people thought it will be done in a year or so, and at an investment of X. Even after 6 years and investment of 13X, the product is still not developed, still not acceptable to the customer. So there are many cases of this type. So unless you have domain expertise in the area in which you want to do your business, be very careful. So have you really understood the product development and approval process? It's not just a question of development, it's also a question of approval. Like even today in the pandemic situation, there are many organizations, many pharmaceutical companies who say that they have developed a vaccine, but has the vaccine been tested? Has it been approved? Has it been tested under one condition, one set of conditions, or a variety of conditions? Has the approval been received under, let's say, the US law, European law, Indian law? There are so many angles to it. So have you really understood all this before you jump into your venture? And what about the resources? In business, nothing is for free. And to do any activity, remember you need the 5 M's, the 5 M's of resources. So have you thought through those resources? Do you think the resources are available to you? If they're not available to you, will you be able to acquire them or get them as and when you require them? These are fundamental questions that we need to understand and ask ourselves. And the most important part, you do all the effort, you do all the hard work, you launch it in the market. What do you think is going to happen? There are enough competitors waiting for you to enter. The minute they see your idea, they will try to replicate it. So what have you got in your product which either protects you by virtue of a patent, and of course a patent is not a 100% protection, but it gives you some sense of protection. So do you have some protection, or do you have a strategy by which you can continuously innovate and come out with a feature or a benefit which is ahead of the competition? Or do you have some unique asset or a network which others may not have, which makes it difficult for the competition to come in? So in the financial world, we call it a moat. What is your moat? If you don't have a moat, anybody can come and conquer you. So competition is something which can easily come and take you over. Now, we must have heard this many times. First mover advantage. I am the innovator. I'm the first person to introduce this product in the market, and therefore I have the first mover advantage. Hold on. Look around. In how many industries is the first mover still around? Take telecom. Who are the first telecom providers? Where are they today? Mobile phones. Who are the first handset makers? Where are they today? Computers, laptops. Who are the first manufacturers? Where are they today? Your radio taxis or taxi aggregators. Who are the first introducers of this concept of taxi aggregation? Where are they today? So first mover is not necessarily something that will really help you and sustain you. Invariably, in real life, we have seen that the first mover has a lot of disadvantage because they have to spend a lot of time, effort, money to not only innovate and create the product, but also to create customer acceptance. Now, customer acceptance, by the time it happens, are you in a position to sustain and grow? Because cash flow ultimately catches up with you. And the regulatory compliances, you do nowadays regulations, corporate governance are becoming very, very strict all over the world, including India. So if you're not taking care of the regulations will catch up with you. Okay, so how do we do the evaluation? So split it up into three parts. First part is at the initial stage, idea stage, the value proposition part. Uh, do the value proposition exercise properly, sincerely, in depth, and you will get a lot of answers. The second part is your activity, your operations. Suppose this idea is okay. If I have to execute it, what will I require to execute it? Have I planned it out? Have I understood it? Have I done enough detailing? Do I have the resources? Do I have the skills? Do I have the domain expertise? Do I have the infrastructure? Will I be able to execute? And the third part is how do I scale it? So scaling again is a function of not only you being able to do more and more, but also how the market or the competition is going to react to what you are doing, and consequently, will you be able to keep growing? So these are the three parts of your homework that you should ideally do before you start. Now, obviously, somebody will say, hold on, we can't do everything before we start. Fair enough. It's a realistic issue. But have you thought about it? Have you done some homework about it? Have you visualized what is likely to happen? Can you anticipate? If you have not anticipated, you're jumping into the deep sea. How? God help you in the deep sea. Now, there are people who do that and they succeed. I'm not saying no. But if you look at the mortality rate, we all know the answer. So the journey, the idea journey is not so simple as it is made out to be by many people who are not yet entrepreneurs. It's only when you become an entrepreneur that you realize how the idealistic situation suddenly change into a realistic situation. So there are different stages of your ideation journey. There are different stages of converting your idea into a product. There are different stages which will give you a huge amount of insight. And those insights, if you build them properly into your venture, will help you grow very systematically and in a robust manner. Now, how do I get to do all this? So there are two answers to this. One is you do the venture yourself and you learn along the way. So we often know and we have heard it so many times that entrepreneurship is learned when you actually jump into the arena and actually set up your venture. So to those kind of people, I say your first five ventures are net practice. Do your first five ventures, go and get enough field experience, go and understand what happens in real life, and then you will become wiser. So your first five ventures will really train you, will really guide you, and will really, condition you to such an extent that you'll become a seasoned entrepreneur. The sixth venture, you will be much more wiser. So that's one way of doing it. Obviously, it's a very difficult process. It's a huge exercise in terms of time, effort, money, investment, resources, networks, and so on. Those who can afford it, those who want to do it, go ahead and do it. So the shorter method there is don't take big ventures in that scenario. Take small ventures. So these small ventures, you do them as early as you can. And what do you mean by as early as you can? From your childhood, from your school life, from your college life, from your campus life, from your life when you don't have enough family responsibilities, when you're free, when you're independent, when you can take a lot of risk. That is when you do all these small ventures. Do them seriously, do them for a short period, do them and get the experience so that by the time you're of a young age, you are ready to take social responsibility. You are also able to uh, set up your own venture in a much better way. So experience can be acquired. If you understand what is involved, then you can plan in the reverse manner and get that experience much shorter. So I strongly encourage, and that is one of the reasons I really enjoy the academic world or interacting with students, and I do a lot of mentoring for startups, where your first few ventures really transform the way you look at entrepreneurship. And again, I repeat the same thing. Do these initial ventures as early as possible, ideally when you're still as a student, still on campus life, still not having family responsibility. So that is the ideal time to do multiple ventures. But what's the second alternate? The second alternate is to reach out to institutions like, let's say, Flame University. Now we've got amazing programs on entrepreneurship, and we also have a tie-up with Babson College. Now, along with Babson College and the Flame University ecosystem, we conduct a whole lot of practical projects, assignments, exercises, activities on campus during the program, which really conditions you and builds you as an entrepreneur. So Darshan has already spoken about the various programs that are being offered. I strongly encourage you to have a look at some of those and seriously look at entrepreneurship. Have you built yourself enough to build a business? Now, this one little chart has a lot of meaning. Most entrepreneurs start and remain in the first area, which is the comfort zone. And in the comfort zone, the dynamics are completely different. Many people are not able to come out of the comfort zone. So in your comfort zone, who are you doing business with? You are doing business with your own network, with your own family, with your own friends. and you feel life is made. There's a big life outside of your comfort zone. Have you tried that? Now, again, experience shows that most entrepreneurs, they come from a technical background, and those who come from a technical background, unfortunately, are not equipped enough or experienced enough in marketing. So to come out of a comfort zone, you have to interact with more and more people. You have to get into real life situations. You have to do things which are of a marketing nature. So unless you reach out, unless you go out of your comfort zone, you will not be able to really scale up and grow and become sustainable. So the earlier you're able to get out of a comfort zone and get that experience of overcoming your fears, learning a whole lot of things, and then graduating to the growth zone, your venture will not really pick up and grow. So this holistic exercise is what we provide in our curriculum, and that holistic exercise then helps you as you go into your venture. A lot of people have heard about the business model canvas. I've seen a lot of entrepreneurs, a lot of students say, "Oh, business model canvas, we've done it. We know it in and out." Now, what they do is, many people, what they do is, they just look at the business model canvas and they fill it up and they say, "Oh, it's done." It's not that simple. When you really want to apply the business model canvas, this business model canvas can give you huge insights and huge strategies for you to visualize, plan, anticipate, and implement. So let us see how to actually develop the business model canvas in a very short capsule. So it starts with the value proposition. We already touched about the value proposition. A value proposition design can, a simple exercise like that, a lot of people do it in half an hour. It can take 2 days if you're serious. We conduct workshops on value proposition design for actual entrepreneurs with their team, and it normally takes 2 days to come up with the first reasonably acceptable value proposition. So it's not a simple exercise. It is a really, really involved exercise. So your business model canvas starts with the value proposition and the customer segment. So these are integrated. The question now is, how do you connect the two? So to connect the two, we have the customer relationships. So how do you take care of your customers and the channels? How do you reach out to your customers? How do you connect with them? So this is on your output side or the customer side. Now to do all that, to provide all that benefit or experience to your customer, you need to have your backup system. Now what is your backup system? So your backup system is a function of the various activities that you are required to do if you are to execute all these things for your customer. And to do all these activities, you need a whole set of resources. Now, obviously, all these activities and all these resources you cannot do yourself. No human being can do everything. So it's always uh, desirable, it's always practical, it's always recommended that you work with partners. So from this exercise, who should be your partners? Who are the people who can actually add value to what you're trying to offer to the customers? So that's how your key partners are identified. And then once all this is in place, everything has a cost in business. So what is the cost structure? What are the various costs you're likely to incur? When will they be incurred? And what kind of costs will be incurred in what proportion, and so on and so forth. So all those details are captured. And the last part is the revenue. So unless you understand all this, it's very difficult to really strategize your business. Now, if you are able to do this exercise as early as possible in your entrepreneurial journey, you'll have fun. From a finance point of view, there are many, many ratios. There are many, many parameters. I will just limit myself to 4 of them. I'm sure many of you have heard of all these 4. So first is break-even point when you recover all your expenses, you enter into a no profit, no loss situation, and then start making profits. Payback period, a lot of entrepreneurs look at this. I'm investing so much money. When will I get my investment back? Internal rate of return, this is what the finance experts look at. The people who are ready to finance you, to fund you, they say, okay, what is your rate of return? And for that rate of return, what should be your cost of capital? And the most important part, which entrepreneurs should actually look at, is free cash flow. What are the free cash flow that you are able to create after you are able to scale up the business and reach it to a particular level of maturity? So unless you have that long-term futuristic visionary thinking, it's difficult for you to expand and grow or scale. Okay, to sum it up, to become an entrepreneur, there are many things that go into it. Many of them you have experienced. Many of your advisors would have already told you all that. So this is just a slide to capture everything in one place. But I really like this slide because of one little thing on the bottom left. So if you focus on the bottom left, what does it say? It says build your product, find co-founders, find advisors, then find capital. I'm taking a pause here to drive home the point that to find capital is the last part. Many entrepreneurs say, I have an idea, give me the money. Sorry. Many entrepreneurs say, I've done this, done this, give me the money. Sorry. Money is available. Will it come to you? Investors say, I have a lot of money. Can you help me find good projects or ventures to invest in? And there are plenty of ventures. They have, I don't know how many ventures they have already studied. The conversion rate of examining a venture into funding a venture is so low, it goes into single digit percentages. Now, finding capital is the last part. And why does capital not come? Capital does not come because whatever little bit we have discussed today in this short time, a lot of entrepreneurs don't do. And if you don't do that detailing, if you don't get a proper grip of your understanding of the business, why should the financiers give you money? So why do ventures fail? So there are a whole lot of reasons why ventures fail. If you study them, a lot of them are within your control. A lot of them you can do a little bit of homework, you can understand, you can take some effort to deep dive into some of the issues and come out with solutions which overcome these situations. So the problem is, are we ready to do that homework? Are we ready to do that deep dive? Are we ready to do that detailed work before we actually jump into the deep sea? Now, one of my favorite slides, we discussed this. Entrepreneurs generally start off with a idealistic situation, and when they uh, commence their journey, welcome to reality. Now, your choice. Which one do you want to follow? The first one or the second one? So, what we do is, me personally, and at Flame University, we help you understand what is reality, and we help equip you to overcome all these obstacles that you are always going to face, whether you like it or not. So we equip you enough so that your real life journey, of course, it will be with ups and downs, but those ups and downs are manageable, are reasonable. So welcome to entrepreneurship and welcome to doing something unique for yourself and for the society. Thank you very much. Open for questions.
Right. Thank you so very much, Dr. Bharat. Thank you so much for that uh, kind introduction to entrepreneurship and the programs. So we have a couple of questions lined up here. Just give me a second. So we have a question by Karthik who mentions that if I have to get paying customers, he has an idea of providing a service which needs initial funding. How do I get paying customers if my idea of providing a service needs initial funding?
Okay, now this itself is kind of a paradox. You have an idea. How do you get a paying customer? You don't get a paying customer on an idea. You get a paying customer when you convert that idea into a deliverable, workable service. So that exercise of doing the work of converting that idea into a physically executable, implementable service, you first have to do before you get the paying customer. So don't expect to get a paying customer only on an idea.
Fair enough. So we have another question by Anil, which says, uh, will investors disallow you to start another business while continuing the startup?
Doing a startup is not a joke. Now, if you don't want to put in your time and effort to nurture that startup, it's like, startup is like your baby. And you are saying, I don't want to take care of my baby and I want to go and live somewhere else. Will your family allow you to do that? So no investor would like you to, so to say, go away from a startup till your startup is able to reach a particular level of sustainability. So don't think of becoming a serial entrepreneur in parallel. That is, you can't have multiple ventures happening simultaneously and then say that I'm a serial entrepreneur. Serial entrepreneur first takes one venture, takes it to execution, scale, sustainability, exits that venture, then starts another one. So don't try to jump. Be focused on one.
Great. Right. So we have another question coming in from Tarun, which says, is there any ideal age for becoming an entrepreneur? Should we be gaining any experience by doing some work first, or should we just directly give it a try?
Let me answer that question differently. The ideal age is not the number that you normally associate with age. The ideal age is the time when your mind is able to accept entrepreneurship. So whether you start looking at entrepreneurship when you're in school or post retirement, that is not important. What is important is the day you think that yes, you want to do something, start. Now, the other part is, should I take the experience? If you've done your work well, yes, your experience will help you. If you want to start it at a young age, obviously you don't have experience. So what do you do? So what you do is start dabbling in as many extracurricular activities as you can, which give you real life connects. Now there are two types of extracurricular activities. One is extracurricular desk oriented on campus kind of activities, helping somebody else in some small function. And the other kind of extracurricular is where you get connected with real life outside of the campus. So I will strongly recommend that you do extracurricular activities where you get a connect with the outside world. So having that experience is very important. It will help you shorten the um, journey from idea to success, or the difficulties will be lessened. And like I mentioned earlier, your first 5 ventures are net practice. So if you're really having some vision or some concept or idea that one fine day I'm likely to become an entrepreneur, I would like to become an entrepreneur, don't wait. Start doing some of the other entrepreneurial activity along with your normal functions or activities, or even in the organization where you're working. Become an entrepreneur. You don't need to necessarily only become an entrepreneur. You can even become an entrepreneur before you become an entrepreneur. So there are many ways to acquire that experience. But yes, age is not by number. Age is when you are mentally ready to do your venture.
Of course. Of course, age is not a number at this point in time. So we have another question by Rishi, quite a long question actually. I'll try to cut it short, but still not skim through the content that he wants you to answer for. So he says that he's running a website which supplies essential commodities of COVID. He's been running it for the last 6 months, and he's hired a marketing agent for online marketing, but somehow thinks that he can add a little bit value to his business. He's from a technical background of CFA and equity research, and he wants to understand what kind of ideas can he use to sustain his business, although it is for a very short period, considering that he works on COVID essentials.
A very interesting situation. I've seen a lot of similar cases happening right now. Now, look at the interesting part. We have uh, an entrepreneur who is coming from a technical background, which is from the finance domain, and doing business in protective equipment. Now, protective equipment technicalities and the finance marketing technicalities are definitely different. So, what you are actually doing is you are doing this venture while it lasts. So if you're talking about creating value, then you have to actually go and interact with your customers. It's not just a website related or a platform related business. You have to actually interact with your customers, understand your end users, and try and see. I believe I was not sure whether you have a manufacturing facility, but if you have a manufacturing facility, then whatever the feedback of the customers, that feedback can you incorporate in your product. Like I was actually interacting with an entrepreneur. What they did was, again, he was an ex-student of mine, graduated and then became an entrepreneur. When this pandemic started, a lot of people wanted masks, and there were a lot of masks available in the market, imported or whatever. And he went and interacted with these users and experienced that there's a lot of difficulty in using the mask. So he and his co-founder, they worked together, took all that feedback and created a COVID helmet. Now that helmet solved a lot of problems, a lot of practical problems of wearing the protective equipment for long periods of time or even for the whole day. So when you are into the technical domain, when you really interact with the customer, that is when you are able to create value. So you can't create value by not understanding the domain. Going deep into the domain is very important for innovation. Innovation and creativity are not only for those who are built or wired that way. Innovation and creativity happens very easily if you deep dive into the domain and really get involved in the exercise. So unless you deep dive and have that related domain experience and connect with customers, you will not be able to create value. I hope that answers the question.
Yes, sir. So we have another question by Anil, who mentions that a lot of startups which get funded are started by students who come from the IITs and IIMs. Is there a specific reason why only those kind of startups get to have a fund investor, or are they because they're too highly educated, or do they know how to look at the right places? So that's the question.
This is actually endorsing my earlier statement, which said that you need to have deep domain knowledge, deep domain expertise. And if you have domain expertise, there are a lot of people who are ready to support you. But if you don't have domain expertise, even if you say that your idea is good, there are many people who will say, sorry, you first show it, first demonstrate it, and then only we will look at you. So there is no shortcut to domain expertise. You cannot sit in your glass towers, ivory towers, and do business. You first have to be on the ground, understand the customer, have domain knowledge. Then, with success, you go and sit in the ivory tower. That's a different story. So it's not surprising that IITs and IIM graduates get funded. It's more of IIT graduates who get funded. Why? Because they know the domain so well. They Many of them are not really knowing much about the marketing aspect or the customer aspect. So what happens is, to create a co-founding team, these investors who really understand the customer and who really understand the market, they join hands with the domain experts. These investors are not domain experts, so it's a natural synergy that is getting formed. So if you really understand what happens in the investing world, the investors will come on your board, and they will also really do a lot of mentoring and advising to you as a venture. So your skills are yours, which the investors don't understand, your domain expertise. Investors have skills and networks which the entrepreneur does not have. When both come together, there is a perfect synergy. So that is why IITs and IIMs get funded.
Right. All right. So I think we've come to the end of questions. Students, any other questions, anything that you want to ask us? Professor Bharat Damani is right in front. Professor Bharat, if you will just wait for another 1 minute.
Sure.
Yes, I think we do seem to have one. Just a second. All right, we have a couple of students thanking you for your webinar. For a couple of others who've been asking, do we share this presentation or the recording? The recording will be available on our channel, Flame University, on the YouTube page. So you could probably log into it sometime by tonight or by tomorrow morning. You should be able to use this for future reference. So we have another question coming in from Kuldeep, who says, I'm a food business operator. He has started his business in 2016. His question is, how can we analyze our business for better growth? As a mentor, what is it that you would suggest?
Okay, now this is it's just not possible to answer it in this short interaction. To give you some inputs, I need to interact with you. I need to really understand what your business is, and once that understanding is available, we can definitely find ways by which your business can grow. So I guess what you need is a proper mentoring session from somebody who is ready to help you.
Right. Kuldeep, so just to adding on to that, we have put in a couple of contact details on the chat box. So you could probably send us an email or probably drop a text or something, and somebody from the team will get connected to you. And accordingly, we'll probably get connected you to Dr. Bharat and a couple of others also. So I think, Dr. Bharat, I think we have come to the end of the session. We have pretty much covered all the questions here. And I want to take it one more time on the record to say thank you for this, because we have a lot of people responding back as saying thank you. So thank you so very much, guys, for joining in. Before you leave, I would like to invite you guys again for another upcoming session that we have lined up on the next on 9th of November, which is the next Wednesday. We have it by Dr. Amarpreet Singh, who's going to talk to you about overcoming family business struggles to grow across generations. And I think based on the conversation that we do have some kind of first and second generation entrepreneurs in this link. So I'm expecting to see you guys in the next upcoming sessions. And we will, after you log out of this, you will also receive a survey. We'll request you to take a minute and fill in those couple of questions so that we get a genuine feedback about what is it that you want to listen to next. Thank you so very much. Thank you, Professor Bharat. Thank you for giving us your time and looking into intellectual minds, new minds for today. And thank you again, Madhuri and the PGBI team for hosting this wonderful series called as the Founders Talk. Stay safe, guys, and good night.
Thank you so much, sir. Thank you, Vakya.
Thank you very much for inviting. Real pleasure to interact with all of you. Stay safe. Bye.